Hello and welcome to this episode of the Energy Connects podcast in the run up to India Energy Week in Goa next month. I'm your host, Chiranjib Sengupta, and today I'm delighted to welcome back on our podcast Vandana Hari, the founder and CEO of Vanda Insights. Vandana, it's a great pleasure to have you with us again. And to start off, could you talk us through the outlook for the Indian and the global energy market in 2024 against all the prevailing situation?
Yeah, great to be back with you, Chiranjib. Thank you very much. So, yeah, that's a good place to start. Look at the big picture as we contemplate 2024. Let's look at fundamentals and prices, trend and expectations. So we saw very high prices and spikes in 22. Prices cooled off considerably in 2023. So we had, let's say, Brent was averaged around $99 in 2022, had cooled off to around $82 a barrel last year. I expect that trend to continue into 2024 on a combination of two major factors. So one is on the demand side, the outlook for global oil demand growth is that, of course, it will continue to rise year on year. What we saw in 2023, global oil demand went back above pre-COVID levels. And so what we are seeing from this year onwards, most likely, is growth moderating to more, getting closer to around perhaps 1% year-on-year increase levels that we used to see until COVID struck. So that is on the demand side. The outlook for the global economy is not too great. So we are expected to see a second consecutive year of decelerating economic growth. And when you look at the oil market in that context, the most straight line that you draw from an anticipation of deceleration in economic growth is that global oil demand growth will also be somewhat sluggish, at least compared to the previous 2 years. On the other hand, the supply, especially outside the OPEC, non-OPEC alliance, is looking quite comfortable. We saw record oil production, not just record oil production in the US last year, but highly unexpected quantum of annual growth. So US production grew almost 1.1 million barrels per day year on year in 23, and it's going to expected to continue growing this year. There's a few other countries around the world, again, outside the OPEC Plus alliance, which are also seeing a sort of a simultaneous spurt in growth. So in the Americas, of course, you have Canada, you have Brazil, you have Guyana. Across the Atlantic, we're seeing good production growth also happening in countries like Norway and Kazakhstan. So when you bring all of this together, when we look at 2024, it's ample supply, strong supply growth outside OPEC Plus, and perhaps not that spectacular a demand growth. So my expectations are for crude prices to continue softening this year. So as I mentioned, if we use Brent average of $82 a barrel last year as a reference point, I would expect prices to average closer to the mid-70s, perhaps between 75 to 80, but I would veer more towards 75 in terms of the average for this year.
Thank you for that fantastic overview, and especially interesting to see the OPEC, non-OPEC, supply mix changing a bit. Now, according to the IEA, India will be, will see the biggest growth in energy demand globally by 2050. So, what kind of opportunities does that translate into for energy companies who are looking to invest in India?
Chiranjib, I'm not a big believer in making predictions as far as global energy demand or the mix of that energy demand is concerned all the way out to 2050. I'm sure you'll agree, we have seen such immense transformation in the global energy markets. And of course, now we have this entire juggernaut of transitioning away from fossil fuels, and what sort of push and pull and factors it creates in overall energy consumption, because let's not forget that part of the decarbonization wave is also achieving better energy efficiency. You know, sometimes we tend to forget that. More conservation measures, you know, circular economy sort of initiatives. So I wouldn't go all the way to 2050, but I take your point in that India is perhaps the brightest spot right now on the global markets in terms of energy demand growth. I, of course, focus on oil and gas, and you know, I'm already seeing the highest rate of growth. So Indian oil demand grew about 5% year on year in 2023. Which is spectacular, coming on the heels of a 9% annual growth in 2022. So yes, we're coming off a lower base, agreed, you know, but the way Indian demand has leapt out or bounced back from the COVID era crisis is just absolutely phenomenal. And I have every reason to expect that, you know, given also the projections that Indian economy will continue to grow. Of course, demographics is a major factor in the favor of the country. There's a lot of infrastructure. Basically, it's not just the population, but the country is growing in every direction. So as long as a lot of investment continues to flow into infrastructure, into creating manufacturing, and so on, we can expect reasonably, at least for the next decade, for India's oil demand growth to remain on a very strong upward trajectory. Now, that does make it incumbent upon policymakers to start taking a holistic view, of course, of energy demand, but put in place a policy that will stand in good stead for the next 10, 20, 30 years, irrespective of when the growth tapers off. Because I think the next few years, at least, India being able to get to secure affordable and reliable supply of energy, I think will be key to ensuring that its economy has a smooth runway for takeoff as well.
Right. Yes, absolutely. And as I think as we get closer to India Energy Week, we are also seeing that similar kind of optimism and expectations as exhibitors line up to be present at the show. And just talking a little bit about India's upstream sector. So what are your thoughts on the kind of policies and collaboration that you think are needed to ensure that India is able to exploit its domestic oil and gas reserve to the maximum?
So if we are agreed that Indian energy demand growth is on a upward trajectory and is going to remain there for the sort of, let's call it, the next 10, perhaps 20 years, then by definition, that ticks at least one of the main boxes for, is it a good investment destination when it comes to energy matters, whether it is in the upstream oil and gas production, or downstream, or even midstream. I would say even in facilities like the strategic reserves that the country has started putting together. So the answer to that, the most simple answer, of course, is straightforward answer is yes. Now, of course, at the same time, we ought to acknowledge that just a straight line up in terms of demand growth projections is not enough for any investor, right? So investors look for, aside from certainty of demand, they look for a strong fiscal regulatory framework. They look for assurance that there won't be, you know, too many curveballs coming at them. And then they look for a good, favorable taxation regime. They look for not too much bureaucratic procedures and you know, what we call red tape. And so basically certainty of, you know, what sort of, if they are looking at, let's say, the fiscal and regulatory environment today, then what sort of certainty there is that it, if anything, it will only improve in the coming years. So if you look at India's oil and gas upstream sector, most of the easy to find oil and gas in the country has already been discovered. Now, that by and large makes India pretty much, it puts it in the same basket as the vast majority of the rest of the world. There's very few new major oil and gas provinces opening up in the world where the molecules are easy to find. So in that respect, perhaps India is not that different. However, I think it's important to keep in mind from a policy perspective, or from a perspective of, what's the kind of package the country should offer to attract foreign investment. It's important to keep in perspective that it's not a big hydrocarbon province, right? So if you compare it with, let's say, the North Sea, which actually is seeing a major revival of interest and upstream investment and projects that are starting to deliver more oil and gas, India's resources are relatively modest. Also, the remaining oil and gas, and perhaps more gas than oil left in India yet to be discovered and commercialized, is increasingly to be found in deep offshore areas, which need very sophisticated technology, which need a lot of investment. And once again, I'll get back to an earlier point that even if you find companies that are willing to make that investment, it is a very long-term commitment. You do not put millions of dollars in an offshore project, not knowing what the fate might be of the market or the pricing of your product in, let's say, 10 years down the line. So the certainty angle comes into play there. But right now, for India, it's become a bit of a challenge to attract the likes of, let's say, ExxonMobil and Chevron and Total Energy into its upstream sector. I think a lot of progress has already been made, Chiranjib. The contract terms have been progressively improved, sweetened for upstream players. A lot of new frontier areas have been opened up. And so all of these changes are definitely progressive, but a lot still needs to be done. For instance, I keep hearing that there are still, even after contractors have won a particular exploration block, they sometimes have huge hurdles to jump and a long time-consuming procedure to go through in terms of getting all the approvals, not so much from the central government, but the state government. And then, within that, from the local governments that are supposed to give them all the approvals for them to actually start exploring in that. So that I also hear that while a lot of the red tape has been cut back, a lot more can still be done to make decision-making faster and sort of less cumbersome. I would also probably just end that with a comment on the upstream windfall tax that has been imposed on crude producers, that it's perhaps time to just get done with it, to remove it completely. Because India does have, if you just compare it with some of the other tax regimes, fiscal regimes, and in some of the other producing countries, including Asia, India's regime is relatively far more onerous. So it does leave relatively less of the price of crude oil in the hands of the upstream producer. And, forget about new exploration blocks, even just using enhanced oil recovery techniques to try and coax out more oil out of the existing fields, which again is a good way to go for India to bolster its oil production. Even those are expensive. So what you want is really to take a longer term view on this, to leave a little more money with the upstream producers. If you want to tie it up with, the upstream producer pays less tax if they make a commitment to investing money into EOR, or you can find ways to do that. But I think it's important for the government to find ways to incentivize financially the producers to invest in these technologies that could help India at least push back or delay the decline in production that it is already seeing in when it comes to oil and condensate.
That's really well put and very interesting to hear. In fact, in a recent interaction with the chairman of Oil India, and he was similar. He said that they're looking out for foreign collaborations, maybe domestic or foreign collaborations for exploration in some of the assets which are really deep offshore. And yeah, and then they're essentially looking for the expertise to help them. And it resonates very well with what you just said. And just taking off from there on one of the uh, points that you made in a thought leadership also for India Energy Week, that the government and India essentially should focus on ensuring stability of supplies, and also should prioritize the expansion of its SPR. And could you elaborate more on that?
Yes, that's a point that I have been making for a few years now. And I would say that perhaps the urgency of it, if anything, has only grown. I was just looking at last year's numbers for India in terms of how much it imported and how much of crude went into its refining system. And import dependency last year grew to a little over 90%. So as we look at the country's fuel consumption continuing to grow, perhaps as with new refining capacity, or even without it, as the country does have a little bit of surplus refining capacity, and refiners try to use it to export products. And we've seen that happen last year, for instance, taking advantage of the new markets that have opened up in Europe. All of this points to one thing: India's crude imports will continue to rise, right? Now, and given the 90% import dependency, I think it's extremely crucial. And again, tying back to my very first point, that you have to solidify your energy sources, your energy supply, in order to ensure that it is a good support for your economic growth, and at the very least, it does not hinder your economic growth. I think it's absolutely crucial for the country to grow its strategic reserve. Now, as of now, we know that it's at about 5.3 million metric tons, about 39 million barrels, which is about 8 days worth of imports. Now, just to use a sort of a benchmark for the world, the International Energy Agency requires its members to hold at least 90 days worth of net imports as strategic stocks. Now, India made a little bit of a late start on this, which is okay. It was perhaps in the last decade or decades, it was not that crucial. But now that we can agree, hopefully, that it is critical for the country to have this buffer against external price shocks and supply shocks, and just look at how many shocks we have seen in the past 2 years alone, right? So the Ukraine war, and now this Israel-Hamas conflict has not. The second one has not actually reduced or affected supply out of the Middle East in terms of volumes, but it has created a lot of upheaval in the market, because ships are having to travel a much longer distance. You have more oil in the water, which means refiners have to plan way in advance in terms of their spot purchases, but also they're having to incur much higher freight costs. Freight costs on some of the routes for tankers have tripled just over the space of the past 10 days to 2 weeks, right? So all of these sort of geopolitical upheavals, I think we should safely assume that there will only be more of these in the years to come, not less. So one way for India to safeguard, to protect its refiners, to protect its consumers, to shield them at least partially from oil price shocks, is to create a much bigger buffer of strategic reserves. And I think it was about 5 years ago that we heard plans to more than double the reserve from the current levels. And unfortunately, nothing has progressed on that front. So I would say that I think this needs to be taken up as an absolute priority number one. How you manage the purchase and the release of oil, like what price points, what price triggers you want to use, I think all of that should definitely not be left to let's say the decision of the ruling, the political party in power. I think all of that should be enshrined very clearly in regulations, which also gives a lot of certainty to the domestic refiners and the domestic end users. But all of this can be done. We have the best of brains and the best of mathematical brains as well in the country. I think all that is needed now is a resolve to get this done.
That's an excellent point to ponder about. And finally, what are you looking forward to at India Energy Week, which takes place in Goa from February 6th till the 9th, and especially looking at its conference agenda?
So I think this event made a great start in Bangalore last year. I expect a lot of the key topics, issues facing the country, the region, and global energy markets as a whole got some really good airing last time. So I expect a lot of those topics will remain the same this year as well. I would say that the geopolitical threats, how to become more resilient, how to make your energy sector more resilient, your energy to ensure energy accessibility, affordability, reliability of supply. I would really look forward to seeing perhaps a greater emphasis on these topics this year, and I'm sure there will be, because I think that's pretty much a given now, not just for India, but globally. But I think it's especially crucial for India to ensure that that energy provides all the support that the country needs to continue growing its economy at a strong momentum.
That's great. Vandana, it was such a pleasure talking to you, and thank you for your superb insights on the energy landscape, and hope to see you soon at India Energy Week.
Thank you very much. I look forward to.
A big thank you to all our listeners, and we hope to see you at India Energy Week too. And I'll be back soon with more episodes and more guests from the Energy Connects podcast series. Thank you for watching.